Hello, everyone. This is Javon Foster, founder of J&Day Trading Group, LLC. This video is just a continuation to what is Forex. Today, we'll be talking about how the money in the Forex market is generated. How do we generate money in the Forex market? And what affects the value of a given currency pair? Okay, let's go. So how is money generated in the Forex market? Money is generated in the Forex market through buying and selling currencies. Traders and investors participate in the Forex market speculating on the price movements of a different currency pairs. Right? And how do traders speculate on the price movement? By looking at the technical and fundamental analysis. Now, when traders make successful trades, they can profit from the difference in exchange rates. For example, if a trader buys a currency pair, for example, let's say Euro USD, Euro and USD is the United States dollar, at a certain price and later sells it at a higher price, they can make a profit. And it's the same if they do the opposite. If they sell the same currency pair first and then buy it back at a lower price, they can also profit from the price difference. If we look to the image to the left, right, if price comes to a given point, let's say this middle point here, right, and based on my technical and fundamental analysis, I can determine if price, I can speculate or determine if price will go long. In other words, buy, increase in value. Now, what price is increasing in value? When we look at the pair, it's a Euro/USD. What is this saying is the Euro is going against the US dollar, right? So if the Euro increase in value, the US dollar decrease in value. If the Euro decrease in value, the USD increase in value, okay? Another word for sell is to go short, and that is when we think the Euro is going to decrease in value against the US dollar. Buy or go long is if we believe that the Euro is going to increase in value against the US dollar. So let's look at a lot of people are confused with with Forex because it's digital, but let's look at it in a real life example, right? I'm gonna give you guys two examples. Let's use gold, for example. If I have a bar of gold, right, and a bar of gold is worth 100 US dollars, you have $100. You want to purchase that gold for me. You gave me $100, I give you the bar of gold. Now you have that gold for like say 1 day. That gold now, because of the things around in our everyday life that affects the fluctuation of the value of gold, which we will discuss for currency pairs later, right? The value of gold increased to say $150, right? Now, if you bought it for 100, if you were to now sell that gold back to me, you would sell it for 150. Now you just made a $50 profit. And that's pretty much what we're doing with currency pair. Gold against the dollar is the same thing as euro against the dollar. The euro currency versus the US currency, right? Now, would be another example would be let's look at currencies for example. Now, if you were to travel to, for example, say the Philippines, okay? You travel to the Philippines and say 1 US dollar is equal 50 pesos, okay? If you exchange your US dollar for 50 pesos, you're in the Philippines, you have not spent that 50 pesos. You have not touched it. You have not used it for whatever reason. You want it now, you're ready to convert back your 50 pesos to 1 US dollar. But when you convert that 50 pesos back to 1 US dollar, the value of the peso has increased. So now instead of you getting back 1 US dollar, you got back $1.10. you just made a 10-cent profit. That is pretty much what we're doing on the Forex market, but in a digital form. We're trading currencies against one another. We determine if one currency is going to increase in value or decrease in value against the other using technical and fundamental analysis. And by doing so, we're able to make profit. And we're able to make profit by using leverage, which is something brokers offer, and by also using lot size, right? And counting a certain amount of pips. Now we'll go in my previous videos, in my later videos, we also discussed that lot size pips and how it's calculated and what they are. Now, who earn in this market? Market participants. People who earn money in the Forex market are individual retail traders, such as myself and you and others, institutional investors, banks. Yes, the banks do trade in money, and I covered this in the previous video, and other financial institutions, such as hedge funds. The income they generate depends on their trading strategy, market knowledge, and risk management skills. Risk management is key. You can have a great skill and strategy, but with poor risk management, you struggle to make profit. Now, as for individuals getting paid, traders typically deposit their own funds into a trading account with a Forex broker. Any profits they make from successful trades are then credited to their trading account. They can withdraw these profits to their bank account the same day or use them for further trading activities, right? More money you have in your account, more leverage you have, right? Now, I do cover how to create a broker and connect it to, for example, MetaTrader, and recommended leverage and so forth. That is in my introduction video. Another alternative, right? Because typically, this is how traders can make money by deposit money, trade and make the money, withdraw, right? But another alternative is getting funded. Sometimes we may not have the funds, for example, like the funded company, My Forex Fund, right? It's $85 for a $10,000 trading account, right? And you may not have $1,000, $2,000 to trade with, but you have $85. And if you have the skill and proper risk management, you can pass these challenges and leverage the opportunity there and earn money, right? They'll give you an 80% profit split. You get 80, they get 20, right? Now, I will talk more about funded accounts, the truth about them, the pros and cons in another video. What determines currency to increase and decrease in value? Now, this is the second segment of this training video. The value of currency in the Forex market is determined by various factors, including number one, and there are about 8 major factors, right? But included interest rates. Higher interest rates in a country tend to attract foreign capital, increasing the demand for the currency and causing it to appreciate. Second is economic performance. Strong economic growth, low unemployment, and stable inflation can lead to a stronger currency, and it reflects on a healthy, robust economy. So now if you're looking at the fundamental, right, and you notice that, okay, the unemployment rate is going to be reported today, right? You can wait for that news to play out, and based if it's a positive, negative news, you can determine if the U.S. dollar will increase or decrease in value, but not just by the fundamental alone, but apply that with your technical analysis. The third one is political stability. Countries with stable political environments and sound policies are now more attractive to investors, leading to higher demand for their currency. Economic policies are more attractive to investors. If you guys hear me pause for a minute, apologize. Not feeling the best today, but I promise I will drop the training to help you guys increase knowledge, okay? Verse number 4 out of the 8. Trade balance. A country with a trade surplus, exports exceed imports, will likely experience an increase in demand for its currency, driving up value. Inflation rates. Lower inflation in a country can lead to an appreciation of the currency value as the purchasing power increase, right? So these are things to pay attention to. What is the inflation rate in the country at? For example, the United States, what's inflation rates here? That will help you determine if our currency is strong or not. And you don't just look at US, you might want to also look at the inflation rates for the euro, right? If that's doing worse than the US dollar, even though the US dollar might decrease in value, but against the euro, the US dollar might be increased in value. Market sentiments. Speculators' perception and expectations about the future value of the currency can influence short-term movement, right? So if like a JP Morgan bank, right, they have the funds to drop millions in the market, right? So if they speculate that this market is going to move, the value of the currency is going to increase, and they expect this market to go long, right? They can pump money in the market and end up affecting the direction, right? And we can see this over and over as we look at the charts. 7 is geopolitical events. Political developments, conflicts, geopolitical tension can impact currency value as investors seek a safe haven currency in times of uncertainty, right? Number 8, central bank interventions. Central banks may intervene in the Forex market to influence their currency value by buying or selling it in large quantities. Yes, the central banks do this very often, right? Do I agree with it? I guess they have their reasons, right? But this is why it's important to pay attention to the news. It's not just all technical, right? To see what's really happening so you can make better decision on either if you want to buy or sell a currency pair. Now, those factors, among others, right? But those 8 are the major roles. Interact and play a role in determining the supply and demand for a currency in the Forex market, leading to fluctuation in its value relative to other currencies. As a result, currency exchange rates are constantly changing, providing opportunities for traders such as myself and you to profit from these fluctuations. They happen so often every day. It's not like having a baseball card and you got to wait 20 years for the value to be up. This is happening every day. And because it's happening every day, it gives us opportunity to make money every single day. So I want to thank you guys for watching this video. If you guys have any questions, as always, feel free to reach out. If there's anything I can help you with, just ask. And, I love to help others. I really want to see others be successful in the space. And a lot of people are looking to be successful in the space for whatever reason, either to help your family get back more time or financial freedom as a whole. I really want to help others as much as I can. If you have any questions, feel free to ask. Have a wonderful day. Bye.